What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the Sofi stock. We will also cover the overall market. Guys, the NASDAQ indexes, they weren't down that much today. But if you look at some of the growth stocks, you can see that, some of them took a massive, massive hit today, guys. And it was really in that cloud SaaS sector. These are still the highest valuation of technology stocks, and now they are taking their final blow towards the end of this 30% correction in the Nasdaq. So we might have some of the bigger names, like a Netflix, a PayPal, an Amazon. Those might be getting really, really close to the end of their sells, because you can see these indexes stabilizing a little bit. We're not getting those 3-4% drops right out the gate on a Monday. We only dropped about 1.5% today. So it looks like there's a final flush on SaaS. And believe it or not, SoFi held up, and that's because we got an upgrade. We're going to be covering that in this video. And if you find any of this information useful, be sure to subscribe to the channel. I will be keeping you updated daily on all the breaking news. Be sure to smash that like button, and don't forget to drop a comment. I'm going to be commenting back to as many people as I can. Let's get into the video. All right, guys, we can see S&P 500, like I said, barely red, maybe a 0.5%. Dow finished green. NASDAQ only 1% on the day. Russell even a 0.5%. Crude oil was break even, and we could see SoFi Technologies finish 2.3% green on the day. And guys, it was just a strange day when you take, the separate growth stocks and the indexes. I'm telling you right now, because SoFi literally was one of the top stocks in the market today. It was a very strange day, and I'm going to show you the details. As you can see, guys, we have 100 growth stocks, and just like I said, those SaaS cloud stocks towards the bottom. Look at this. Cloudflare, negative 13%. MongoDB, negative 12%. Datadog, 10%. Shopify, 10%. Twilio, 10%. And you also have Snowflake, about 9%. And Zscaler and Okta. So as you can see, that's exactly what I was talking about. These cloud stocks just took a massive hit today, while the index is barely sold off. And guys, if we just scroll to the top, I mean, take a look at this. We literally are following 100 growth stocks right now, and we have SoFi finishing number 4 today with only 2% in the green. So no growth stocks did good at all today. It was a weird market, like I said, when you just take, the balance of, growth stocks and these big indexes. It was just a strange day. Don't feel bad on your losses, guys, because these big whales out there, these hedge funds that were all in on tech 2020 and 2021, these guys have gotten absolutely swallowed. Look at this. U.S. hedge fund Tiger Global hit by $23 billion in losses in tech route, guys. This has been a nasty correction in these indexes, and the reason why it's such a nasty correction is because these guys are getting liquidated, margin called for weeks and weeks and weeks, because they were so heavyweighted, bloated in Facebook, Amazon, also Netflix, PayPal. Those are the ones that have gotten absolutely destroyed. We have a bunch of details coming in for SoFi, guys, and we had a question on one of our last videos. Kyle, who is the put buyers? Where are the put buyers coming from? You're going to get that detail in this video. So that's why I say ask questions, guys, because I can sometimes make videos around your questions. So look at this, guys. This is the filing dates. Look at this. 16, 12, 16, 16, 16, 16, 12. Everybody but this person right here, 12, 16, 16. These are all updated. These are the puts, guys. Take a look right here. This is the value right here, okay? If you total all of this up here, guys, this is about $380 million worth of puts coming from what? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So 12 institutions literally hold $400 million in puts, guys. And you can see some of these guys were absolutely adding to their position. Look at Bank of Montreal. They increased position by 148,000%. Citadel just up there 77%. Jane Street 56%. Some trimmed a little, but guys, some of these big banks like a Bank of Montreal, these guys are massively input. So I want you to know where the negativity is coming from, why this stock cannot, really ramp up and, get out of these downtrends even with the upgrade. It's because of these guys right here. Some of them have long positions, some of them are hedging, some of them are completely bearish. This is your $400 million worth of puts. And you can see two of the top American banks are in the mix. We have Citigroup right here and Bank of America. They are betting huge on puts right now. I know they have long positions, but I'm just showing you they have a mixture of long and, put positions as well. So guys, we should have finished down 4% today in this type of market. Okay, we should have been down 3 to 4% because that's the usual Monday morning tech sell-off, fintech sell-off. Thankfully, we got a little bit of upgrade and went green. So hopefully we get a green day in the market either Tuesday and Wednesday and make our way a little bit higher to maybe at 750, potentially at $8, which is so sad to say. SoFi shares have taken too heavy of a beating ahead of significant earnings momentum, analyst says. Like I've been telling you, like a broken record for the past 9 months, SoFi double beat, double beat, double beat. Guidance was incredible for the fourth double beat heading our way, guys. So yes, earnings are about to pick up because we got the bank charter license. We are able to use our customers' deposits, which are totaling over $1 billion, adding over $100 million worth of deposits, per week, I believe. So we're going to be cutting down our costs, which should be lowering our losses this quarter. I told you guys specifically, Q1 has virtually nothing bank charter related in it, okay? Q2 right now, April, May, June, you're getting your bank charter number. So let's see the difference. Remember, Lending Club, their earnings turned around dramatically as soon as they got their bank charter. So guys, by the end of the year, once we get 3 quarters of the bank charter, I really think we could see a profitable quarter if you have revenue ramping up to like the 400, 500 million range and losses going down, 70 million, 40 million, 20 million. I think in the next 3 quarters, you're going to see a profitable quarter for the SoFi stock, even adding 400, 500, 600,000 members per quarter. That stuff costs money. I think they could still be profitable by the end of the year. 1 quarter, that's not going to be a full year of profitability, but that's going to be a profitable full year heading our way for 2023. So as you can see, this analyst says earnings are about to really start picking up. For those of you that don't know who Piper Sandler is, as you can see, they are a American independent investment bank and financial service company. Market cap's only about 2.2 billion, so they are pretty small. So it looks like they invest and focus in mergers and acquisitions. And pretty much, SoFi just became, a public company as of the SPAC deal. So this is why they're covering them. We're going to listen to the interview just to see, what this gentleman said today, because you rarely see any of the banks covering the SoFi stock come out and give a bullish thesis, because these guys are so massively short and puts, and it's just incredible how rigged the market is with these legacy banks being able to give SoFi price targets that are absolutely ridiculous. So let's listen to what they say. I already listened to part of the interview, and you can see the CNBC analyst, forgot his name, come out the gate with negativity. This is what they're trained to do. Remember that?
Is the analyst behind the call. Let's welcome in Kevin Barker, equity analyst at Piper Sandler. Kevin, again, welcome. But why? Why now? Because there's certainly a lot of negative sentiment that could drive SoFi lower.
Obviously.
Yeah, I mean, it's been under a lot of pressure. There's funding pressure across the business, a lot of headwinds, but earnings are set to inflect higher, which we haven't seen for the last several years for SoFi.
Bank charter.
As earnings start to move higher and we start to see that in the back half of the year, the market's going to come back to SoFi. And with the stock trading where it is, I think there's, you're going to see a lot of the market start to favor it once again.
Now, Kevin, I wonder, though, if there are a lot of investors in the market who are used to instant gratification. How much crow does an investor have to be prepared to eat before they feel like they're right on stuff that they buy right now?
Of course. I mean, we got a ton of pushback on the call, especially around financials investors who look at rising funding costs and a price to book value multiple that is fairly expensive relative to other banks. But at the same time, I mean, there's a reason why people were buying the stock a year ago, and the growth that the company's been able to produce. Combined with what I think has changed quite a bit is that there's a deposit base now, which improves the funding base better than most other neobanks that we see out there today.
Yeah, we just had
differentiate SoFi.
Speaking of that, we just had Anthony Noto on a few days ago, post earnings, talking about what he's going to do with that deposit base, and perhaps with the interest that investors, savers can earn on accounts in a rising rate environment, especially given SoFi now is a bank. What does that do for them that gives them an advantage perhaps over competitors?
It gives them a sticky source of funding, a lower cost of funding relative to warehouse lines or selling whole loans in the market. That has been, continuing to rise. The costs are continuing to rise for those types of funding sources, especially in this rate environment. And so, if they can, lean on a deposit base to be able to grow and to be able to hold loans for a longer period of time, their earnings should move higher.
So market cap on SoFi right now is right around 5.5 billion. What are the potential outcomes good for investors here? I mean, is this an area that's going to consolidate with neobanks, where perhaps somebody tries to take them out for their customer base and technology at some point, or do you expect them to grow organically?
I think they're going to grow organically. I think they have bigger things that they're looking at over the long term. And if they can establish a deposit base and a strong capital base, which it appears like they have with the capital that they've raised, they should be able to continue to grow at a fairly rapid clip. If that were to continue, you're going to see quite a bit of upside in the stock as long as the market starts to stabilize here.
So where's the asterisk in your call here? I mean, usually, you don't come out and say, well, there's no way I'm wrong about this. Is there something that you're going to be watching down the line, and if they trip over a particular hurdle, then your call could change?
Yeah, I mean, maybe the student loan refi that happens after the student loan moratorium ends. We don't know when that's going to end, but we anticipate that's in 2023. So that could be a headwind that we're not anticipating. Rising funding costs. Maybe there's not a refi potential there on the student loan side with rising rates. So, there's definitely some headwinds there. Maybe the deposit costs are going to rise faster than we expected. Certainly that could happen. And the financial services segment continues to lose money. So the SoFi needs to start to show path to close to profitability in the financial services segment in order for a lot of this to work. If they do, though, there is a lot of momentum, and that will continue to move to the upside.
All right. It's cheap enough you're willing to take that bet. Kevin Barker, thank you.
So you can see that guy really follows SoFi. He knows everything that's going on inside of the company with, the massive losses coming in from the financial segments. You also have, the student loan headwinds. He covered that. But you guys got to think, SoFi has pretty much pushed away student loans for the full year. That's not even in their guidance anymore. If student loans come back, you're going to see SoFi's guidance jump to like 1.6, 1.7 billion out of nowhere. So as you can see, he's bullish on the earnings showing growth, and that's going to be because of the bank charter saving them a lot of costs. And that's what I've been talking about, that I've been excited for like what seems like a year, guys. It's finally here. We need to really see what the bank charter can cut in our losses. Once again, SoFi is in the Q2, and this is the bank charter quarter we've been waiting for. So this guy's sees a lot of upside, $10 price target right now, and maybe when the market flips by the end of the year, we can make our way up to $15 plus, heading into a 2023 that could be a year for growth. Once again, 2022 has a lot of headwinds because of inflation that we need to get under control. If you made it to the end of the video, I want to say I really do appreciate it. I enjoy doing this video for you. As you can see, it is very rare for some of these, bank analysts to come out. But as you guys can see, this is not one of the massive, legacy banks. This is a smaller investment bank, and he is bullish on the company, and he sees upside with that bank charter. Once again, be sure to drop a comment, because some of these, comments can definitely lead me to do a video if it's a good comment. As you can see here in the beginning of the video, I answered one of the guy's comments, wanting to know where the puts are coming from, who's buying these puts, and now guys, $400 million in puts are coming from 12 investment banks or investment hedge funds, etc. Once again, my name's Kyle. Hope you have a great day.